Back to the markets. You're going to have to write a piece talking about market reaction in a short while. Do you sell European periphery bonds on the back of this or not?
They'll weaken to some degree. You know, again, the structure of Europe, there's 60 billion euros a month of buying by the European Central Bank that's happening anyway. And in this kind of event, that can get increased if it needs to be. Interest rates are going to remain negative, so there's a lot of carry along the curve as they sell off. I wouldn't want to be sitting owning lots of them at this particular point in my life. So if I had them, I'd want to be lightening up. But when you look at how that market trades, it's not trading like a proper market. You've got a central bank against you if you're speculating against them. I'm not sure that's the easiest market to go to.
Not to own, but it's very difficult not to short it, for instance, because of the central bank. Let me get on to the... Oh, you want to describe what I just said?
No, I was going to say the Bund's a different story, and that will rally. The money will gravitate towards the German bond market.
Will curse once again. What about the euro? 110 is trading.
I think the euro, it's not going to go down in a straight line. You will have a conversation with someone in the States at some point in the next 24 hours who will tell you with great confidence this takes a Fed rate hike in September off the table. But I do think that euro-dollar will trade through parity before we're done, because one of the things about this process is this is not the end. This is part of a long negotiation, a lot of uncertainty. And the euro is going to weaken in the process.
Is a Fed hike off the table then? Because already Wall Street is showing indications of selling off. If you see a fall in asset classes and there is more pressure on US dollar to the upside, does that destroy the Fed's ability to hike?
No, this Federal Reserve, as we know, is pretty timid. If the world's not friendly for rate hikes, they'd be inclined to postpone. But there are two more payroll numbers between now and then. There's more wage growth, more CPI data. There's a lot of water to go under the bridge. I wouldn't say it's off the table yet.
Just one more trade out there. Euro-yen, this is where we're seeing most of the movement tonight in reaction to the referendum. This is interesting because to me these are two carry trades, or two currencies that have been used as carry trades, as funding currencies. The euro was seen as a high-risk funding currency these days. The yen probably less so when you've got the BOJ out there in the backdrop. So why are we seeing the movement on this trade in particular?
This is a trade I actually like shorting as a trade, written about it quite a lot. I think euro yen's going to trade the other side of 125 before we're done in this. The yen is much cheaper relative to all its fair value models and so on than the euro. They've pushed it to the point it's very cheap, where in a risk-averse environment, the yen is going to strengthen. If you look at what's moved tonight, the big movers, the euro's down a lot, the Australian dollar's down nearly as much so far. So this is going to see Japanese investors much more timid about moving money offshore. And with the currency where it is, it can strengthen further. So euro-yen, I think, has got, over the next 12, 18 months, has got a long way to fall. So I'm not surprised that's happening quickly.